This column here, again, for some of those that like to utilize the more sophisticated order flow view on Jigsaw trading, this is just your total at bid, total at offer, which is a non-refreshing version of this one here, meaning that every time a larger number comes through on either side of the bid and offer, that gets refreshed and taken out. Watching it here, it's going to accumulate and you will see the total at bid and the total at offer. Hey there, welcome back. Mike here, reporting from Axia London HQ. And today I got a special one for you. We're going to be covering those three main tools that are the core of the Axia methodology: footprint, order flow, market profile, and we're going to merge them into a pattern bridging session where you can visualize, and I'm going to walk you through how volatility operates from a mechanical perspective using those three tools. So often during times of volatility, it can get very noisy and it can be very difficult to use each tool individually. Now, when you bridge all three of them together, this is where the magic happens. So let's have a look at a specific example from April 2nd, when obviously the Trump tariffs were set to go into effect. And we're going to look at what a single print high looks like when it is being absorbed and taken by sellers. And then we're going to watch what kind of things you want to look for when the market is going to reverse back the other way. Let's have a look. So as you can see here, we've got all three tools, the profile, in two forms. On the left side here, we have the collapse version, so the standard view that most of you are used to. Here we have the expanded version of the market profile, which just means that it's emulating the prints in a chart format going horizontal with the x-axis. And here you have the footprint, which, in case you're wondering, the footprint here is set to 30 minutes per bar. So that is reflecting the exact same thing that you're seeing here on the expanded market profile. So the current single print that you're seeing, the orange single print that's developing, sitting at 5,721 quarter, that is reflected. As you can see very kind of, if you look closely, you can see that that double print there is representing this double print here, right? Now, the important thing to understand is the gaps within the print are representing the gaps you see in the footprint. Now, if you've watched any of my videos, you might have heard the term zero prints. Now, that doesn't necessarily mean that they are literally zero bids and offers. It just means that relative to the regular volume that the footprint is seeing, when there's a significant dip in that volume, you'll notice little divots like this one here, as you can see, where there is a lot less liquid than, say, this large node here, right? And that's the idea that markets move to, through, and from liquidity. And this is a representation of how they move to and through that liquidity. So let's go ahead and click play. We'll clean this up a bit. And what you're seeing is, on the order flow, you've got a standard jigsaw ladder here where you've got the the volume profile, and you've got the bid and the offer here in the center. And all I'm doing, folks, and I've talked about this in many streams, I'm just using that current at bid, current at ask to give me a dynamic active footprint so I can understand where absorption is occurring on the bid and the offer in rapid motion. Now, this column here, again, for some of those that like to utilize the more sophisticated order flow view on Jigsaw trading, this is just your total at bid, total at offer, which is a non-refreshing version of this one here, meaning that every time a larger number comes through on either side of the bid and offer, that gets refreshed and taken out. Watching it here, it's going to accumulate and you will see the total at bid and the total at offer. So now that we've got that out of the way, let's go ahead and press play. Real quick, just so you're all aware, this down here is the monthly. This is just so that I can see the long-term view, and I can also see where there are areas of weaker liquidity. So as you can see here, there's a box. Now, I know that you're going to have to squint to look at this, but if you notice some of these highs that we had in the summer before the year really got going, those highs are much more compressed in price action, whereas this contract inception point, meaning the beginning of that S&P March contract, this area the June contract, this area is much weaker, right? So typically when markets retrace through liquidity, we tend to reckon with those areas of weakness. Again, the concept of moving to, through, and from liquidity is going to be seen on all time frames. And that's a key element here with the pattern bridging is not only are you bridging the patterns on the intraday basis, but you're also keeping an eye on that monthly long-term view. So I'm going to go ahead and press play now. And what we're going to really be looking at is, first off, let's go right to left because this is where you've got the active price action, right? What I've done here is once the market reached this sort of distribution high, the beginnings of it, right, with the first two prints, I refreshed the volume profile from a standard view so that I could see where the tails are developing above a point of interest. Now, where is that point of interest? Well, this point right here. There is a very clear vacuum that developed here where the market jumped from a value node at the 700 handle and then quickly moved up into the 720 handle without really properly trading within this area. Now, when I see that, when I'm on the market in the intraday session, that is a light that triggers in my brain and says, this is something that I need to try and understand how to access. So this is one of those first indications of an access point, right? So what we're going to watch now is how the market distributes this volume above that point. Now, one thing that you should notice, and you should always look out for this on your 30-minute footprints, is are you seeing a equal amount of willingness for the buyers in a down move to buy more of what the sellers are giving them? So if you look at a tail on the bottom of a footprint on a low, on any day session that ends up being the daily low, you often see a very small number on the right side of that footprint. That is because there are no buyers left to take what the sellers are giving them, right? So when you start to see a lot of buying accumulation willing to take those offers, you know that the market is accepting that move lower. Whereas if the market is just not finding any buyers, you keep seeing those zero prints on the right-hand side, meaning zero bids and plenty of offers, then that's a sell imbalance that needs to rebalance itself back to the place where buyers are readily available. So in this current sequence right now, as the market tries to trickle back into that sort of sub 720 zone into the 715s, you can see that there is a slow but convicted acceleration to take those offers and start moving swiftly back to where the volume originally came from. So this large node here is now being reckoned with just above that ledge there. And note, folks, I've got the S&P ladder here set at full handle increment. So you're going to just see the full handle jump rather than in quarter increments. So the key here is that, like I just said, and I'm going to pause it here to really make sense of that little hint I just told you. So notice how after the market comes, and this is probably the most critical point of this video, folks. This is where that constant observation, constant capturing and organization of that sort of observation materializes into realizations where you can go, this is contributing to my conviction in my access, right? So as the market tested the volume just above that lack of liquidity zone here, you can see that there's a relatively low amount of trade happening in that snapshot, in that moment in time. So what you can start to set as a conditional is, okay, if the market's going to come back to the previous area of value, and I'm already short, thinking to myself, okay, I want to see this thing essentially fail and reject here and then find its way through this liquidity zone as the first conditional that I want to stay in this trade, that is an edge, right? That is an entry point that gives you conviction. Okay, my stop is above that volume distribution, and my conviction to stay in the trade beyond is to first get through an access point that then can lead me to, say, your next access point. And that's when you move over to the profile, where you can see clearly, as we're distributing this volume here, you can see clearly that there's a node to reckon with here. There's some excess gaps to work and repair here. And there's a very small little volume node defending the value area high sort of distribution, where you would see a more reactive selling if the market were to make it back down there, based on my usual observation. So again, I'm just gonna go ahead and put this back on here. Now you can see, really you want to keep an eye on, okay, so this really poor area of trade, is that now going to fill up with abundant willingness to take those offers that are being given? And is there going to be enough of a buy-in balance to keep the market distributing above here? Because we know that this could very easily turn into a distribution that puts out that kind of more, you've got a distribution down here. It could very easily become a double distribution. So again, using one tool in volatile environments can be very difficult. This is why you want to bridge and layer. So folks, as you can see, this is now the third or fourth time that the market has essentially rejected this previous low from the previous 30-minute print here. And now this is where the moment of truth comes. And of course, folks, you want to consider the fact that when you are observing this, you do want to look for that sort of unwillingness to take bids at the prices where they were taking bids, and you want to see that kind of active histogram lowering the size of the bids that are significant in size. So you can see this little node that I'm hovering here. Notice how that node keeps appearing inside of this excess point. So it's likely indicative that I'm not the only one observing that excess point, that people are potentially or machines are potentially trying to front run this point of excess where the market has a higher probability to retrade. And again, I highly recommend that you observe these areas with your own order flow tactics to try and see if you are also observing the same. So as you can see, this is now a clear sort of sticky ledge that is experiencing a lot of accumulation within the rotation of just this basically 720 through 715. Let's call it 717. And you can see now that there's a much larger amount of orders coming in on this handle. And this is the key bit here, is you really want to watch and notice how it's very heavy. You can even use this histogram here, or excuse me, this power meter that you're seeing here. Again, those that utilize the Jigsaw tools, this is just a representation of the current at ask and the current at bid column that you see here. So if the current at bid is greater than the current at ask, the snapshot at bid or the snapshot at ask, then you're going to see a lift. And if you see a pressure on the meter, it just means that there's more asks on the snapshot. So in case you were wondering. So you could see it's very sticky. Once again, a lack of buyers here, continuing to keep the market in distribution around this very, very full liquidity zone. And there is a lot of patience required to see this through, because if you let the sort of chop that you see within this small range tick you out, as soon as you capitulate, let's say it comes back up here and you can't bear to see it potentially trade back through that single print where you have no or very low trade up here, you can then see the market gun through this area, and then you'll end up selling it only for it to do another rotation back. So these are the kinds of moments where, if you're debriefing this, you want to try and time how long this usually takes. So as you folks can see, it is not an immediate thing. And every time there's a slight extension into this zone, it's very much the case where it quickly gets bid back up until just now we can see there's a capitulation. And really within that 8-minute rotation, there was a significant lack of sort of buyers here, and now buyers have appeared, and you almost have to wonder, is that because they kept seeing it hold? Again, just speculation that you have when you're trading, but it is sort of that holistic mindset where you think of how market participants or machines are interpreting that, and when they see that imbalance and then suddenly they do start to take what's being given, then okay, this is a potential continuation breakdown, but you want to see this get filled up. You want to see this high volume node retain that pressure in case the market does distribute back up there. And then you want to see if you can get to the next node, pass through the excess, and then get through the next node again. Markets move to, through, and from liquidity. They do not move in a straight line. They move in zags and zigs for compressed periods of time before then extending to new areas of accepted value. All right, folks, I hope that helps understand what these profiles, what these footprints, and what order flow is telling us. And I look forward to seeing you in the next one. Cheers.